Is Campbell's soup stock a goodbye? What's up, my milk money millionaires? I'm Joshua. Welcome to my channel where we learn how to make our money, make more money. And on this channel, I'm trying to teach a variety of strategies for building wealth everywhere from safe dividend portfolios to selling options to having some speculative stocks to juice up those returns. If you'd like to see more of this content, please like and subscribe. I appreciate the support so I don't have to quit and start a cute cat video channel instead. Anyway, one of my favorite ways to build wealth is to buy quality companies with a good dividend while they are down, so I have a safe price to buy and hold for a long time. After they dipped this week, I wanted to see if Campbell's soup fit that bill. So let's get into it. But first, a reminder, I'm not a financial advisor, just a YouTuber, so do your own research and make your own trading plan before investing at your own risk. A silly reason that I wrote off Campbell soup in the past is I thought they were just Campbell soup, and I assumed they could never really grow that much. But surprisingly, the most famous brand of soup is actually an owner of many other powerhouse food and snack brands, after making a strong effort in acquiring new brands over the last few years. Many of these brands are brands I buy or know someone in my family that buy, which gives me a lot more confidence that the brands have a little bit more durability, especially with my generation, which was one of the concerns I had with Kraft Heinz, which you can see in this video and my channel. Some of Campbell's big grocery meal brands include Prego, Pace, and Swanson, and V8. And of course, as a dad, SpaghettiOs is a major staple, not to mention that a third of our monthly food budget goes to filling the pantry with Goldfish, another great Campbell's snack brand. And I grew up with my dad always munching on Snyder's hard pretzels. So some really killer brands in addition to the classic good Campbell's lineup. So we have a no doubt about it, solid, reliable consumer staple to park money in safe, at least from a brand durability standpoint. But do we have any growth potential? In their very recent term, Campbell's had a boon to their top line as stay-at-home consumers stocked the pantry, including a 20% increase in soup sales alone. Is this sustainable? One major focus of the company is that they are increasing their focus on building their key brands versus continually acquiring new ones. They're going to be increasing their marketing spend from 6% to 7% of their total revenue going forward. They have a pretty decent food moat. Having a moat in the food space to me sounds somewhat flaky, as you can always switch your soup brands or ketchup brands or snack brands overnight, theoretically. However, behavior from consumers and vendor relationships can provide somewhat of a moat, and Campbell's does have such a moat. For instance, they average over 50% of the shelf space in the U.S. grocery soup aisle. That's pretty dominant. Another edge Campbell has is its huge economies of scale and production that allows it to keep its costs down so that they can afford more R&D and marketing spend relative to its competition, allowing its moat to remain. And they can leverage their store relationships to continually have that large shelf space and kind of dominate the sales. Now let's get into the valuation a little bit. Campbell's had an insane 7% growth for such a large company, mostly due to the one-time surge of pandemic buying, and analysts predict it will return back to a modest 2% growth, which is not bad for a behemoth company, but obviously not a barn burner, which is why I like to pick up these value stocks when there's dips in the market. It currently holds a 18.4 PE ratio, which is the lowest it's had in the last 5 years, which is a good sign. And also, its PEG ratio dipped to almost 1, which is a huge buy signal if you're a Peter Lynch fan. However, it can be misleading. Its earnings growth was so temporarily enhanced that the PE and PEG may look a little bit better than they are going forward. The price to forwards earning ratio is still only 16.37, which is slightly lower than its 5-year average of 16.96. I believe we would be buying Campbell's not at necessarily a great discount, but a very fair price currently. Morningstar analysts estimate its fair value at $49.50, which is its current price as of March 25th. So again, pretty much right at fair value. So it wouldn't be too risky to buy it now, especially with a very strong 3% yield. Looking at the charts, it has been in a sideways channel for almost a year and is falling sharply off its recent high around 51 in the upper range of that channel, and will hopefully trend a little lower to get near the $45 to $46 range again at the lower end of the channel, which can get it to be a 7 to 8% undervalued. Then I think we have a very strong buy again. So looking at the chart, we have a very long sideways channel that could be creating a long base of consolidation for a future bull run. All right, so what is the bear case for Campbell Soup? Well, with inflation rising and COVID expenses on their balance sheets, will those impact the profitability in the near to medium term? Also, they may have some similar problems Kraft Heinz had, where their brands were losing out to store brands and other premium niche brands. However, I do think some of their brands like SpaghettiOs and Pepperidge Farm, are much more resilient than many of the craft brands. As people return to pre-COVID habits, their spending on groceries may decrease in favor of going out again. Also, as people get more health conscious, then it's possible that their snacks especially will take a big hit. And also, of course, being a giant company, it's very highly probable that they could just have slow anemic sales going forward. All right, so what's the bull case? The market is moving back to value stocks, and I think a fairly valued, strong dividend payer is a great bet in this environment. And if they increase their marketing and brand development spend effectively, they could surprise with their growth. I also think that the recent sell-off because of the prediction of the COVID sales going away could be overstated. I think some of the buying behaviors that came about from COVID will have more inertia than people predict. My family, for instance, is no longer worried about the virus much, but we are still maintaining our habit for cooking every night. Also, as a long-term Pepsi shareholder, I have really liked my consumer staples companies to also be in powerhouse snack names, as those seem to provide more growth potential than mature cola or soup categories. The biggest bull case for Campbell's will come from its price. It's fairly valued now and in a long sideways consolidation channel. If we get much more of a pullback, we will get a killer buy that you can hold for decades. And I think we are due for a bullish move out of this stock in the next few years to at least push back to its all-time high of 68. So if we have any positive trend towards better sales, then I think we will make that move happen. So what am I doing? So I think it's really hard to go wrong with a stock like Campbell's for a long-term play. I do want to look more into their sales pre-pandemic and how much the sales are holding up now as the pandemic is subsiding to feel super confident in having a full position long-term. However, if I think if it hits $45 soon, it'll be too good to pass up. So I think I'm going to buy this dip and then research their sales to decide if I want to have a larger position going forward as well. What are you doing? Do you agree? Do you see some problems that I missed with Campbell Soup? What price do you want to get in? Let me know in the comments below. And again, I'm Joshua. Thanks so much for watching, and I can't wait to see you in the next video where hopefully we get a little bit wealthier together. So until next time, peace.